Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I'm taking a look here at the Dow Jones, and you remember that's only really 200 stocks. The triple-digit ones are the ones that count. The reason why I was looking for a potential small move down today, I don't know what's going to happen, but move down for a small amount right now. But the reason why is all of the time that market went up. It went up till 9 o'clock in the morning. So let's try it again. Let's do it from 7:30 until about 9:30. It was up, and then for the next 4 hours, it never made a new high all day. Now you stop and think how much selling had to be in there. Setting on top of that, people trying to buy and pushing it through, and someone was not doing it. That comes out of reading books like Jesse Livermore, the reminiscences of a stock operator, and watch the prices. And he would always say, he says, I got to buy it on the breakout. He said, I see it trading at 59, and I know it's going to 61, and I buy it at 59, and next time I look up, it's 53. So these numbers mean something. They really do. Now, I want to share something with you from our good friend Rich Anderson that's going to be in the next week's newsletter. I was going to put in this week, but the explanation would have been a little bit too much. So just give me 1 second and I'll get it right up here. Everything we work on, open interest and all this stuff, are formula related, folks. And this is the one you're going to be watching right now. We'll blow this up so you'll be able to see it at a maximum. There it is right here. This is the volume analysis cheat sheet. In other words, we see volume spikes, declining volume with the trend. All of these things have a meaning, a mathematical outcome for that. And that's what we were looking at here. You see, we were not looking at a high volume breakout, high volume confirmation, any of these things on Friday. It was nothing like that. Let's go back and look at the S&P. Just grab up here. Where do we go here with that old stop and P? It's got to be here somewhere. Here it is right here. Okay, now look, this is what we were looking at. I'm going to switch over to the daily chart. Okay, get this up here and get this out of the way. And this is what, shut the front door and raise the rent. Okay, give me 1 second here. Okay, here is the volume from this. This is the volume from yesterday. Okay, see that volume right here from yesterday? It wasn't even hardly average volume, folks. That was not even hardly value. Hardly. It was almost below average. And here we have this monster breakout and every single index was doing that. That was telling you you have a breakout, but it's on a low volume, and it was. And so that's why I said, well, if it's up on Sunday night, then I'm totally wrong. But if not, then there's probably going to be some type of correction. Now, where we're standing right now, you can see we've rallied all the way back to the 61% retracement on the day here already here with a little ABCD pattern right there. You can see it, ABCD. The question is, if this starts to weaken, lo and behold, what happens with the Russell and the Dow Jones? Because what's the weakest? Like the old cheetah out in the jungle. He doesn't go after the giant water buffalo. He goes after the baby coyotes or whatever they are, the easy prey. That's it, okay? So that's another thing that was important. One other thing, well, there are many other things, but let's take a look here at the Russell. Treasury bonds, try it again, folks. Now, Treasury bonds, we had an ABCD up here at 57.05. We got to 57.03.5, and then we backed off to this level right here. Held really good support right here, folks. It really did. It stopped right there where it should have. I didn't check this, but no, it didn't quite do that. So I thought it might get down to that level there, which would have, been like these other ones, but that didn't do that. So it's held up relatively well. Okay, and there was your big ABCD up in here. And as you can see right now, as we're looking at this, we just punched our way above the 382 just now. That had been really strong resistance here at 402. We're 402.20. We're now right there at 402.22. I'm relatively bearish on the bonds. If we look at these, I believe it's the daily chart. There's where we are. We're just making a rally coming in here. If you remember, just a few days ago, we talked about this really nice ABCD pattern that formed down there at 13 and a half, and we've had a pretty good rally. But folks, pretty good rally is giving it a little bit of a doubt, because you can see here we've only gone from 113 to 115, and we've completed this ABCD. That's the one we looked at last night. So this is not running away to the upside, but it's still not dropping. So that's what we're watching. Now let's switch over for a minute here and take a look at the gold market. This is the gold market with the AI program built into it. I'm just I'm not doing anything with that. You can see it's done a really good job here today. But since we're going to be on the air, and we've got to line it up so that it lines up perfectly right here. So right here is when the show stops. This is when our show ends, I believe. 12 to 1 o'clock. No, our show ends a little bit. But watch this around this time frame here, folks, because it's fitting very nicely. Okay, and so watch this level here. That's at 34.20 or something like that. The reason behind this is, if we look at this on the long-term daily, and this is what's really exciting. Let's do the 4-hour so I can see it a little better. Okay, here's where we were. There's what happened on Friday. Okay, we went up and went to the exact 382 retracement here at 34.23 was the exact number. The high today has been 34.21, so it hasn't even made a new high as of yet. It didn't even back off anything during this time frame. If we look at this on a little shorter time frame, you can see there could have been some possible ABCD patterns in here, but they weren't. They just didn't. It wouldn't go down. And so it's hanging up in here. Now, if we start going above 34.30, 34 in that area, that means that 382 is no longer valid. But look how long it's been here, folks. Between 34.25 and 34.05, it's been here for a day and a half. I don't know. That's a heck of a lot of consolidation. I'd be really careful shorting this, but it's got a really big number up here. Now, if it takes this number out by just a little bit, which is certainly possible, then that might tell you that, that pattern that we're looking at, that 382 in the long-term daily, maybe that is going to be a really good pattern. All right. So let's take a look at that and keep that watching as we're watching that to see what we're looking at right here. Okay, now we've got a couple other things that we need to, let me clean up the thing here, and so we'll be able to move it right now. And okay, let's get over here and talk about here it is, folks, the market that never goes down. This is the live cattle market. There's where we are. Over the weekend, there was at the close, there was a cattle on feed report that was construed to be slightly bearish, and you can see here the market broke from 38, it dropped 5 cents, then it rallied up, go back to the 382. Not showing any type of topping in here yet, folks. We'll get this up here so you can see it easily. I think hopefully it's on the hourly chart. Nope, wrong one. I want to get the daily up there.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, we're going to talk about the cattle market here for 2 reasons. One, the pattern, and the second reason, I feel they owe me 2 cents. I know that's silly. Anyway, you can see here, this is the weekly chart going back to 2024 in August. Oh, same time right about now, August 25th. And you notice here that we have these patterns measured around 240. Those patterns that you're looking at right here, these extensions, because these exploded out of here. All right, that means that you have to add 1.27 to this. That takes us to 240. So far, the high has been 238.60, something 238.36. We're 236.75 right now. Now, we had a relatively bearish cattle on feed report. They didn't put as many little baby calves into the system that they thought, and the fact that corn's getting stronger, that means. But folks, you have to understand the mentality of a cattleman. They are the epitome of. They make those guys on Bitcoin look like church-going monks. They're so risk control. I remember when this history goes back in the late 60s, we were trading at Conti Commodity, and one of the brokers there had the account for McDonald's for the Western United States. That's all he had. He hedged cattle just for that. And they always, Lad Hitch, who was the guy that owned all that cattle, came in one day, nice guy. He was going to Hollywood Park to the races and stuff. And somebody said to him, he says, have you hedged the cattle? He says, you betcha, buddy. He said, I got a Texas hedge on. He says, what's that? He said, I'm long the futures and long the cash. And that's how they think. They are basically, what to the walls, but that's what they do. And boy, both up and down. Now, we haven't seen any down now for well over a year. It's been pretty much straight up other than 2 corrections, one in April, one in July. I'm pointing those out to you now. But when this does turn, And someday, maybe not in my lifetime, but in your lifetime, there will be a turn. So what you want to be doing is you want to be ready to do what we try to do when we see something like this, is to sell that first 382 retracement. Now, had you done that this morning, like I did, hold on one second, I wanted to show you how that turned out. There's where the break was. Okay, here's the breakdown right here. There was your 382 right here, and I got stopped out for my 1 point loss right there. And there's where it is right there. Was your 382. I'm out, and I haven't done anything since that time because it's went up and done some more. So that's all I'm willing to give it is $400. Now, eventually, I'm going to get that right. But right now, it's not working the way that I wanted, so I've got to stand aside and wait and see, what's happening. It's not how much money you make. It's how much money you don't lose. In fact, we had a guest into our trading room on Friday. We had a wonderful day trading. It was just couldn't have been any better with all that volatility we were having. But he actually has one of his very close relatives is a cousin of Stanley Druckenmiller, and they happen to know each other, and he talks about trading all the time. And Stanley Druckenmiller just came online the other day. I think I've got it. I think I saved that. I'm going to bring it up here so you guys can see it because it was that important. At least I think it was. Let's get up here. Nope, it must not have been. I've already deleted it. But what it was Stanley Druckenmiller said, yes, I work for George Soros, and I learned a lot. But the thing that I learned the most was it's not how much money you make on your winning trades, it's how much money you don't lose on your losing trades. So focus on your losses and the profits will be there someday. That's all I can tell you. I know it's hard to do, and folks, some days I get it right, some days I get it wrong. It doesn't bother me one bit. Well, it does in some ways, because I know everybody's saying, well, this has got to be the one that's going to work for me. Well, that may or may not be, but I can't think that way because I have to do what I think is the best, for the best probability without risking very much. It's how much you have to risk. And so these are the things that I was looking at today. That's why the risk in the Dow Jones today, the market just barely rallied. Look at just to give you an example here, we've had a heck of a rally, 20 points in the S&P, but look at the Russell. The Russell just goes to 382, comes back down. Look what it does. Goes right back to the 382 again, right there. Well, it rose 50%. Sorry about that. But anyway, it's showing you that that's the weaker. And the Dow Jones is doing the same thing. Now, the NASDAQ, because they're getting ready for the earnings of all these others. Oh, I haven't even looked at it all morning. I can see what's really happened here. There's NASDAQ. There's the early morning low. Now, we talk about 382 all the time. Okay, so there's where the explosion took off. I'm just eyeballing it, okay, to see if that was the 382. Now, if it does, you're going to say, boy, maybe this stuff does work. Okay, now we know where we are. See how it went through there? That means it's probably right there, and that's even more important. Because if you mark it right here to your low, to your high, wow, was it miss it by 10 points? Now, if we blew this up just for kicks and giggles, we're going to do that right now so we can see a little bit here. We've got an ABCD pattern here, and we'll draw it in from the very beginning. This was the real wild action from Friday, and then over the weekend, and the ABCD measured down to, are you ready, folks? 2, 3, 4, there it is right there. There was your low right here. Plus you had another ABCD pattern. Please don't share these patterns with anybody else, folks, unless they pay the price, okay, which means hard work. So now this is where we are right now with that. So anyway, this is all about numbers. They don't work all the time, but when they do work, they work fine. Oh, I'm a poet and don't know it. I make it rhyme every time. Okay, one other thing, folks. I have a new physician taking care of me now, and I am going to have to be gone tomorrow because he's very busy. He was kind enough to take me, so I can only see him between 9 and 11, so I'll be back in the saddle on Wednesday, but I'm not going to be able to make it tomorrow. So that's just my just regular checkup stuff, folks. I'm feeling great. Looking good, feeling good, Billy Ray, as they say in the trade. Okay, what else we got looking at right now? Okay, let's get over to the currencies because this was really good. On Friday, remember, our trade of the day was long the euro and long the yen and long the pound. Let's take a look at the euro first, and we'll get this up here. It was on the day, no, it was think there's a 4-hour. We were looking at that where it had all those numbers. Yeah, there's where we were. Okay. Wow, this thing's given up quite a bit, hasn't it, boys and girls? There's you go where we were. Okay, now there was let's get this together so we can see it right here. There was the 382 right here that we were buying at right there, folks, at 116, just under 116. Okay, as we drew this in, this was, I didn't even realize the Fed was speaking, but there was your 382 right there. It says 0.44, but it was only there for a fraction of a second. So there's your ABCD. There's your 382 right here, okay? Okay, now, we mentioned, look, they did the same thing that the stock market did. It goes out and takes the highs of August out by 10 pips and stops. Folks, that is not bullish when something does that. That tells you this market was ready to sell off. And look, it's already backed off to the 61% retracement. That right there is $1,200 today. Okay, so that's what that's looking at. I can't tell. Let's just look 60-minute might show it a little bit better, but it tells you pretty much. Look at that. Takes that high out, and look where it is right now. Here is the key. Remember what we like, 382? Watch what happened when we went to the 382. We'll discuss this when we come back. It's important.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're going to take a look here at the dollar index. By the way, the dollar index trading has been going on for a very long time. Back in the late 60s, and you could trade foreign exchange, but you had to have $1 million account. There were only a few guys there at Conti Commodity that had $1 million account. Mike Marcus was one, Bruce Covener was another one, and I can't remember a couple others. But then you could trade foreign exchange. And the Deutschmark, it's basically Mercedes-Benz and all the German stuff, was trading for like 25 cents versus the dollar. But anyway, I just want to show you, this is where we were here yesterday, with that big move that the dollar had down. You see, it didn't really go very far. If you went and looked, it stopped right at the 618. Almost, well, it did, and you can see we're having a little bit of rally day. That couldn't even take this low out. Now, we did that in the foreign exchange and the euro. We took that out by a couple of ticks. So that was the difference here. So the dollar is holding up relatively well. So when you're trading currencies, what I recommend is you trade the big four, which is the S&P, the euro, the pound, the yen, euro, pound, yen, and Canadian. Those are the ones I think are the better to trade. There's others in there. I don't trade the Swiss franc any. Haven't traded it for many, many years. But anyway, this is where we are here with the U.S. dollar. We did have strong support. That tells us that the euro, the pound and the euro are probably going to weaken today. And it's exactly what they did. So let's look at them one at a time. Okay, there was the Japanese yen. This was one of our big trades on Friday, was to sell that high right there. You can see here, that was right here. Get this out of the way. It was a real easy one, more or less. There was your AB. Here's your AB leg right here. AB equals CD, took you right up to there. And there it was right there. You had another one right there at the same time, went against you 10 pips and immediately made $1,000. And it didn't take those lows out either. Also telling you now what it's doing this morning, as you can see here, all it's making now, we'll just blow this up so we can see it. Let's do the hourly because you'll see more chart patterns in between. There's where we are now. There was a sell right there. That's where we did it. Okay, now we've broken down, held there. Now look what we're doing. Look what we're doing now. We got a really nice potential here for, I think we've already passed the 382, no question about that. That was right here. And now we've gone up to the 50%. It looks like we're going to make an ABCD on this one. So I'm going to pass. It has a really good probability of doing that because we're just at 50%. So I won't mess with that. Of the big four that I look at, the one that is the weakest, of course, is this one, which is the British pound. Okay, now here's where we were yesterday. There was a big move in the pound, but the pound move from 134 to 135.60 is only $900. In the yen, it was like $1,400, and in the euro, it was $1,900. So that was one that you want to trade the euro, and the euro had a better pattern anyway. You can see this went below it a little bit. Now, all we've done so far in the pound is held up relatively well. You can see, I think we just made a 382 just a second ago. Yep, there's where we are, setting it right now. So it's got to hold this level. There's a small ABCD here, but not enough interest in it to really to make any association with profits or loss or anything like that. So we'll get that out of the way. And now I want to switch over here. We need to talk about one of the products that's near and dear to my heart, which is the grain markets. We're going to start out, get this out of the way here. Which one is this? This is the NASDAQ. Is starting to back off a little bit too much. And you can see where the NASDAQ's backing off, and the euro and the others, they're heading south. Okay, let's do this very easily, folks, because we're in the midst of the growing season here. Okay, there's where we are. All right, let me get, this is the soybeans, okay? I want to get the hourly 4-hour chart up on beans. Okay, now you can see last night we went just a little above the 78% retracement. Okay, you can see we're backing off a little bit right now. And there you can see it right there was your 78% level. We went above it by about 3 or 4 cents, and now we're backing off just a little bit right here. Okay, now we were the big trade that we had, and I'm going to go through these one at a time because, sometimes I'm right and sometimes I'm wrong. But the one that I like the best, look at that daily. And boy, you talk about one that's wild. This is it. Okay, there is the soybean oil. Now, there was this, folks, this is mother God and country stuff right here. This really is. I mean, you can do this yourself. This is so important that I want to go through this. You see a bunch of lines on here. Okay, let's just delete all that and pretend like we don't know anything. Well, we don't have to pretend because we don't know anything. All right, there's what we looked at. This market has definitely been in an uptrend. Can you say that? So you can see we've had, just draw this in, we've had higher bottoms, okay? And we've had higher tops for a considerable amount of time. Okay, that's pretty close. All right, now let's take a look at what's happened. Since the market made its low down in here, all right, it's made a correction right there of that much. Now, in Andrew Lowe's book, he talks about how the markets repeat over and over again. Those are called harmonic numbers. There's your pullback right here. And there's your pullback right here, and there's your pullback right here. You see how they're almost all equal? So the next thing you want to do is you want to use the Fibonacci numbers that we look at. So you take your last low and you bring it into right here. It stops exactly at 50%. Okay. Then what you have to do is you got to go back to the low way back here, and you'll see where does that come into? Exactly at the 382 off of that other one, not this bigger bottom. Sorry. This one right here, because it's such a bigger bottom, right? That's it. It stops right at the 382. So that's why this was such a powerful move. Now, on the way up, it was big. So let's look at the hourly chart, because it stopped, I believe, looks like right at the 786. But we're going to, oh, there it is right there. See, it almost hit it exactly. There it is right there. That would have been a nice place to sell. Even today would have been a nice place to sell here on this pullback because that completed that. Here was the report, folks. When we bought it here, okay, we took profits of $900. Then it went all the way down to just about where we bought it and then rallied another $2,000. Never got that because we took our profit and this happened so fast, there was nothing you can do about it. And, it's sad, but that's the way it is. Now, let's look at some of the others because we're in the growing season. And the only market that's actually looking good, it was earlier this morning. Let's just double check. And that's Christmas corn. They had actually had some buying come in today. Oh, look where it stopped. I can see that right now. Hello, operator. Get your cell signal out, boys and girls. There it is right there. Let's get this out of the way here. Yeah, there's your, sorry about that. I can't follow it. There's a 382, and I believe it's off the high. Let's just, it can't be, but it looks like it might be. Oh my God, there it is right there. Yeah, there it is right there at the 16, it's at 12. So there was a sell at that point. So anyway, let's take a break here. I know you get tired of listening to me chatter, so we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is the history out of the past. This is from 1987, August the 25th, the same as today. And at that time, we had a thing called harmonic convergence. That's where we had 5 major conjunctions. There's a new moon, Jupiter retrograde, Mars, trine Jupiter, all that stuff. You can see those little dots and stuff. That's what that was. And I wrote a book about this stuff called Astro Cycles, A Trader's Viewpoint. Arch Crawford were on the show with Bill Griffith that week. I believe it was a Tuesday. I think we were on Wednesday or something like that. We were trading around 2,700 in the Dow. And both Arch and I said, you know, we're going to see a big move down. And I told Bill Griffith, I said, I think we're going to see a move during October that will be at least 300 points on the downside. And he said, why did you say that? And I said, well, Bill, the biggest correction we've had since 1982, which was the bottom on August the 9th of 82, that's just only been 191 Dow points. 191, we cover that in 10 minutes. But it was 191 points. All I did was I multiplied 1.618 by 191. It came out to 316. Well, it was down 556 on October the 20th. But I want to go through this to show you, you know, what I was doing at that time, because it sometimes things will repeat itself here. Get this out of the way here. Move it out of the way here. Okay, here's where we were, okay? This is what caused all this. The S&P, this was the time of the crash. This was the 14th, okay? All right, now here was the 16th. That was a Friday. I'll go through that in just a second. And then this was the move down right here. The low was actually on the 20th by just a little bit. It made that low here, and then it's gone up everywhere until just a few days ago when we hit 65,920, whatever that number was. But anyway, that's what was causing it. I'm going to go through this because sometimes history repeats itself, and it's nice to learn that. Okay, now here was my big day. There was the top in the market right there on August the 25th. Okay, then the market broke down into the eclipse in the early 26th of September. Then it rallied up into August the 2nd. August the 2nd, we were right here. Okay, that was a 61% retracement off of that high. And at that day, that was a Tuesday. Okay, so what I did was I had a daughter going to school back east, to medical school, and I had a big tuition payment coming up, and I'd gone through a divorce, had a lot of money on paper because I owned a whole bunch of Drexel stock that was worth a lot of money, but it turned out to be closer to toilet paper than money, but that's neither here nor there. But from this level right here until this was the day, right there was October the 16th, okay? Market broke that much. Folks, on that much, I paid for her 2 years of education, okay, on the 10 puts that I put on. That was right here. Had I bought November puts, okay, instead of October puts, I could have bought that school, but it didn't happen. There's where it was right there. It closed on the Friday, all right, right on the low. The Dow was down 103 points. That was huge back then, and I was happier than I could possibly be. Okay, now Eddie Horowitz was getting married in Beverly Hills on that Sunday, which was the 18th, and we were there for a party with both my daughters and all the Drexel people, because Eddie knew everybody, and God, there were so many people there. It was incredible. Anyway, this is what happened on Monday morning. This is what occurred. Now, I'm going to go through it because it'll probably happen again. Okay. Say on Monday, what happened, I'm going to read this to you. What happened was there was stuff happening. All it started in the Far East. Okay, that's where the whole thing started, was in the Far East. And we had a Secretary Baker, Jimmy Baker, came out and said, hey, we're having a little trouble over here. When he said a little trouble, that sent this thing starting down, and it went down really big time. Kind of, this is where those planets were, and I want to need to cover that. And then I think I got one other here, the same picture right here. And that's pretty much it, other than the one right here. Oh, these were the things that interest rates were increasing, okay? Also, weakening U.S. dollar, escalating government debt, high-priced earnings to ratios, what we got now, meager dividend yields. I don't know about that. Bullish sentiment was off the charts. It certainly was. And deteriorating market breadth is what we've had. That's going on for quite a while. Those were the things that triggered it on. So I saw that, so I wanted to bring it to your attention to what we were looking at when we were watching these things move forward. As you can see here now, the S&P is starting to move lower, and you can see all these others are starting to move lower even faster. So that's why we're paying attention to it as we watch these things unfold here today. Even the cattle have broken off, so there must be bad ticks in the cattle. Okay, let's get over here. I don't want to talk about the wheat market, folks, because that's my sleeper. I love that wheat market. It doesn't love me right now, but I love it. And let's get up here. We'll take a look. I haven't even looked at it today. I bought it. I put a stop in. I said, okay, if they get me, they get me. And did they? No. Whoa, my God, it's working on my favor today. Okay, here it is right now. There's our wheat. Right here, I've told everybody about this, and I've mentioned to everybody that people are not going to stop buying cookies or eating cookies, pasta, and bread. That's just not going to happen, you know. Okay, there's the relationship that we're watching here in the wheat. Okay, this can't be right. Wait, let me refresh this. This has got to be. No, it gapped up that much. What is, like, that's impossible. Oh, well, I guess it is. I'm so concerned with all this other stuff that I have. I haven't even looked at that it actually did that. Wow, that's a big move. Anyway, this is what I was watching all the way, you know, and I'm nothing more than AB equals CD. That's all I look at. So I'm looking at 509. I know that one didn't work. Remember, we did that. That didn't work. Then we had another one that came in. I bought this on a 1.618 expansion. I'll show you what I was looking for right here. There's the rally app. See, we had the big rally, this little 5-day rally. It stopped right at the 382. Okay, stopped right at the 382. So all I did was I'm going to buy that pullback, is what I said. It took 1, 2, 3, 4, 5, 6 days down. And I just marked it from high to low right here. I bought it at the 127 right there, and I put my stop below. I cover these in the newsletter or in the videos that I do, but I had no idea that it's done this today. The last couple of days, and I'm embarrassed to see. I haven't even looked at it. Not surprising, because all I focus on is all this other stuff with the stocks, because I think that's where the big move is coming, and I'm not sure whether it'll be in my lifetime or not. But that's what I'm paying close attention to. Let's look at soybean meal here, because that should have held up relatively well during this stuff. I've been relatively friendly to that too for a while. And remember, folks, we are almost through the season. In just a couple of more days, and by the end of 1st of September, Labor Day, the bean market is done. It's either been made or it hasn't been made. And the only thing that's going to make it up after that is the fact whether it's going to get supply demand. Maybe the Chinese will take off the tariffs and do whatever. I don't know. But here's where we are. We're trying to make that same pattern here at 382. There it is right there, 288, $2 away. You got to buy this one, folks. If you can't buy this one, throw your chart pencil out into the ocean and just let it go. As a matter of fact, I'm overlooking the Pacific Ocean here right now, visiting some friends and seeing a new doctor. But we'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is it. Mother, God, and country. If you can't do this one, you can't do any of them. There's an ABCD right here. In meal here, let's see, 289. That's $1.50 from where it is right now. There's your ABCD. You're coming down, draw an old 20-minute line in through here, matching the old highs. Let's see how it comes in right there. There's where your stop would be right below there. So you're going to be risking about $5 to buying at 289. Okay. And you put your stop at 284. You're going to risk $400, 400 American dollars. But if this is right, this is the mirror image of that soybean oil trade, folks. There it is right there. So there's AB equals CD. We'll just draw it in. We're going to make it so everybody can see it. And this is what I like this one very, very much. Hold on a second here. There's your AB. There's your CD leg right there. You can see it right there. This is where you buy it. Buy it at 289. And then you put your stop at 284. That would be below that line. See, this line would act like a fulcrum. So once it hits it, boom, it knocks those things up and away it goes. So we could get as low as that, but not any lower. This ABCD is good. The 382 is perfect. So that tells you where your buy is. It's not how much money you make. It's how much money you don't lose. And you're going to be a farmer, a soybean farmer, but you only get a risk $400. You're buying at 289, selling at 284. That's 4 points, and that's it. People are not going to stop buying tofu, and they're not going to stop feeding cattle. So that's what we're watching here as we're looking at this today. I'll be back with you on Wednesday, bright-eyed and bushy-tailed, and I believe we have Mr. Harley as our guest, and we also have Mike Moore as our guest on Thursday, and on Friday we have Jeff Hughes of Alpha Insight. So we've got a really good group of folks here, and so just remember, live every day in an attitude of gratitude, and may God bless. It's not how much money you make, it's how much money you don't lose. See you Wednesday, folks. May God bless.
Steve Rhodes